Good morning. It is Friday, February 27th, 2026. This is the DX Today AI Daily Brief. Today, we are tracking a complex market landscape where hardware giants face investor skepticism, while practical AI applications, from fast food management to financial compliance, accelerate on the ground. Meanwhile, global supply chains are beginning to feel the strain of resource allocation. Let's examine the shift.
Burger King is rolling out artificial intelligence systems specifically designed to track employee friendliness. This initiative marks a significant step in the quick-service restaurant industry's adoption of automated workforce management. The system analyzes interactions to metricize customer service soft skills, aiming to optimize the dining experience. While efficiency is the stated goal, the move raises operational questions about the depth of surveillance in retail environments and the growing reliance on algorithms to evaluate human behavior in real time.
Despite reporting a 73% revenue increase for the quarter and forecasting $1.26 billion in product revenue, NVIDIA's stock has slipped 5%. Investors appear to be looking beyond the immediate windfall, expressing concern over the long-term sustainability of AI spending. This divergence between strong financial performance and bearish market sentiment suggests a cooling of the initial infrastructure frenzy as the market begins to demand clearer evidence of return on investment from the massive capital expenditures pouring into chip manufacturing.
Snowflake is aggressively positioning itself as the backbone for enterprise AI deployment. The company's CEO has outlined a strong growth outlook, driven by deep integrations of AI capabilities directly into their data warehousing platform. By partnering with leading AI model developers for training and inference, Snowflake is betting that the next phase of the industry will focus on secure, governed data management. This strategy aims to capture the enterprise market that is now moving from experimentation to production-grade implementation.
The competitive landscape among hyperscalers is shifting again, with Google recently claiming the lead in language model performance metrics. After a period of catching up, their latest iterations are outperforming benchmarks set by competitors. This development challenges the early dominance of other players and signals that the battle for technical supremacy among the Big Five tech giants remains fluid. The focus is now turning toward how these performance gains translate into utility for enterprise customers already embedded in the Google ecosystem.
OpenAI continues to hold a strong position in the hyperscaler race, though the gap is narrowing. Despite facing intensified rivalry from Google and Anthropic, the company remains a primary driver of innovation in the generative AI space. The current ecosystem is characterized by rapid leapfrogging in capabilities, where leadership is often measured in weeks rather than years. For enterprise clients, this sustained competition ensures a diversity of high-performance options, preventing vendor lock-in as the technology matures.
Tensions are surfacing regarding the deployment of AI in national security. Anthropic has entered into critical policy discussions with the Department of Defense, highlighting the friction between safety-focused AI development and military application. This engagement represents a pivotal moment for government-industry relations, as policymakers seek to leverage private sector innovation while navigating the ethical frameworks established by safety-conscious labs. The outcome of these talks could set a precedent for how dual-use technologies are procured and regulated by federal agencies.
Baidu has faced a sharp correction, experiencing an $11 billion sell-off following reports that it is struggling to meet heightened market expectations. This volatility reflects a broader skepticism facing Asian tech stocks as investors scrutinize the gap between AI promises and deliverable products. The pressure is mounting on legacy tech giants in the region to demonstrate that their generative AI offerings can compete globally and generate tangible revenue, rather than simply following the hype cycle.
Banks are increasingly deploying artificial intelligence to handle the heavy lifting of regulatory compliance. Financial institutions are using these systems to flag suspicious trades and detect potential fraud with greater speed than manual oversight. This application represents a shift from revenue-generating AI to risk mitigation AI, treating the technology as a defensive tool. By automating the monitoring of vast transaction volumes, banks aim to reduce the cost of compliance while tightening their nets against illicit financial activity.
A distinct rotation is occurring in the stock market. While hardware manufacturers like NVIDIA face headwinds, enterprise software companies are seeing a rally. This divergence suggests that investors are pivoting from the infrastructure trade toward the application layer. The market is effectively betting that the value capture is moving up the stack, focusing on software vendors that can successfully embed AI features into existing workflows and monetize them through recurring revenue models.
The global smartphone market is projected to shrink by 13% this year, a decline driven largely by an unprecedented shortage of memory chips. This supply crunch is a direct downstream effect of the AI boom as semiconductor manufacturing capacity is diverted toward high-performance AI processors. The constraints are cascading through the supply chain, leaving consumer electronics manufacturers competing for limited resources. It illustrates how the massive demand for data center infrastructure is beginning to impact production capacity for consumer devices.
Netflix shares surged following the company's decision to withdraw from discussions regarding the acquisition of Warner Bros. This move signals a strategic discipline, with leadership opting out of complex consolidation in favor of organic growth and capital efficiency. In a market environment currently punishing excessive spending, investors welcomed the restraint. It reflects a broader trend where media companies are reassessing massive mergers and acquisitions, focusing instead on profitability and content strategy amidst economic uncertainty.
The Massachusetts Institute of Technology is preparing to host the Big AI Conference this April, focusing specifically on the business implications of generative AI. This interdisciplinary forum aims to move beyond technical speculation to establish rigorous frameworks for business strategy. The initiative highlights the growing demand for structured, peer-reviewed research on how AI fundamentally alters economic models. As the technology integrates into the corporate world, institutions like MIT are stepping in to provide the theoretical scaffolding necessary for long-term strategic planning. That wraps up our briefing for Friday, February 27th. As the market recalibrates and the technology settles into daily operations, we will continue to monitor the signal amidst the noise. For DX Today, stay curious.